In today's video, I'm going to be showing you a interesting chart that I found, and I'm also going to be covering what's going on with the NASDAQ, which is ripping off of its lows, and you've got gold making a substantial move higher, trading at an all-time high at the time of me recording this video. We're going to cover all of this and what's going on with the dollar, crypto, and much more in today's video. Stay tuned. Welcome back to the channel, guys. If you enjoy my commentary, I do want to just ask a quick favor. If you could hit the thumbs up button on this video, it does help just to support with the YouTube algorithm. And I want to talk a little bit about what's going on with gold here. We've got gold making a fresh all-time high, and I want to discuss why this might be. Because at first glance, you might be saying, well, the dollar index is not incredibly weak, and it's not like the economy of the US is falling apart or anything. Why is gold making a massive move higher? And by the way, in terms of the economy, we can take a look at our market heat map really quick just to take a look at this. And what you can see is the US economic heat map still overall strong, though this morning we did get JOLTS jobs, which came in a little bit light. So this chart is showing a little bit more red than perhaps it did a few months ago, but still looking overall very blue. The economic heat map is an easy way to basically look at all of our key metrics that we look at on this channel and give a summary view to us. So overall, we'd still say this looks pretty intact, pretty strong overall economic outlook, although you've had some recent things slipping. Now on Friday, we do get NFP, so stay tuned because that will be very interesting for this section of the economic heat map. So all of that aside, why is gold ripping higher if the US economy overall still seems to be in a decent spot? Well, I think it has to do with all the stuff going on with Trump and the tariffs. And we talked a lot about that yesterday, but the big thing here is, some people are going to say the tariffs are going to be a net positive. Other people are going to say it's going to be a net negative. But regardless of where you fall on that spectrum, most people would agree there's a lot of questions and uncertainty that go with these tariffs. And that uncertainty, especially with Trump basically holding his cards close to his chest, he's not telling us all the details of what he wants to accomplish. That is making the market nervous, and that is why gold, I think, is ripping to a fresh all-time high. This, in combination with central banks aggressively buying gold, makes it very strong right now. And though I don't have a bullish position on gold at the moment, I do have a long position or a bullish position on silver, which is going quite well. By the way, I posted this in our free Telegram channel, which is linked in the description down below. And just a heads up, I'm going to be posting bonus content and bonus clips inside of our Telegram channel. So if you're a fan of the channel, make sure that you're already joined inside of the Telegram channel as well. Again, that is free to join and linked in the description. So again, I have a silver position that's going pretty well right now, and gold looks really strong. But what is really behind all this, and how on earth is the market ripping today so strongly despite all of the tariff fears? Well, I think you had on the Monday Open just kind of a sell the rumor a moment where everybody freaked out about, oh my gosh, tariffs are going to cause the end of the world. And we very quickly filled that gap on Monday's trading action. Now we've consolidated, and at least at the time of recording this, the NASDAQ seems to have broken above that key area of where we kind of gapped open from. Some would call this the gap window, if you will. We filled the gap and now actually have started to try to break higher through that area. We'll keep watching this to see how price action unfolds, but the action on the indices looks pretty strong here recently. Clearly some buy the dip mentality coming into this picture with S&P 500 and especially NASDAQ here very strongly off of its lows. I'm sitting here wishing I had caught that entry. You guys know I've been watching that area, but didn't quite pull the trigger on it. Wasn't looking at the chart at the time and missed this rally. So if it comes back and gives me a chance to get in, wonderful. If it doesn't, then congrats to those who are long. The other signal I'd be looking for on the NASDAQ would be if we just rip through these highs, if we just clear those highs, any pullback, I do like the upside continuation possibilities for NAS longs. It's a trade that I'm very interested in myself. The NASDAQ is still holding on to a bullish reading here, a +5 on the edge finder. So we'll check throughout the day to see if that is still bullish. If there is a potential pullback or setup, I'll of course have to check the NASDAQ reading on the edge finder at that time to sort of confirm or deny the entry for my own trading. The edge finder is currently on super sale right now. You can get 30% off the tool. If you do not already have a copy of the Edge Finder, there's a link and promo code in the description down below of this video. If you'd like some more information about the tool, you can also find it on our website, a1trading.com, or you can speak directly to a member of our support team who will help you out with the Edge Finder, answer any questions you have, can offer payment installments if that's easier for you, and can also accept crypto if that is what you'd prefer. If you need any help with anything, please feel free to chat with my support team using the first link in the description below. And I'm officially out of my oil trade. This trade did not work out for me. I ended up buying this pullback here, thinking that we'd get continuation. Edge Finder had a confirmation there and just didn't quite work out. Headlines have been all over the place. It's been a bit of a tricky week for me, to be completely honest. So, with the sell-off here, I decided just to get out of the trade. And if it continues lower or higher, I really don't care from here because I don't currently have a reading on the Edge Finder that confirms any further ideas for me on the oil chart. So I'm just going to stay on the sidelines with this one, no position, and just continuing to watch. I think we've really, I was kind of looking for something like this, like a pullback into this area and a quick continuation. But because we didn't get that, and now we're just trading back into potentially this range, I just don't really have an interest in this chart. I was kind of looking for, like I said, a continuation. Had the tariffs continued going the way they were, right? We had this big gap up on oil due to the Canadian tariffs. Since the US is a major importer of oil from Canada, that complication could have continued to make the prices go higher, but then there was positive negotiations. And this is why trading is hard, right? Markets are all over the place. Headlines can change things and shake things up really quickly, and predicting it is impossible. So instead of trying to predict it, I just, when the headlines move against me, I just stop out of positions if need be, and I let price action dictate where that goes. I also made this point earlier in my live stream, but basically the idea is sometimes you're going to get headlines that work in your favor, and other times you're going to get them that work completely against you. And over the long term, it tends to even out. So I kind of don't worry too much about it. Sometimes you just have headlines that work against you, and you just say, it is what it is. We move on. I'm also out of my Bitcoin trade. I took profits on this thing, and I'm very curious to see how price action goes from here. We did come down to this 92, 91,000. Really held it beautifully, rejected massively yesterday, seeing a little bit of red here today. I'm curious to see if buyers can kind of recapture this area and continue this upward trend, or if we're just stuck in a range and maybe we go back and test the lows here again. I don't really have a strong conviction right now on Bitcoin, as my system has kind of lost that bullish reading for me. So I'm going to pass on any trades on Bitcoin at this time, but continue to watch for setups on that front. The Dow Jones is a current setup for me on the Edge Finder, getting a +6. For me on the price action side, I'm looking for a pullback possibly into this area around 43,400 as a possible area to get long, but currently just waiting to see what happens. Alternatively, if we break through those highs and continuation setups form, I'll be looking for that play. The Japanese yen has been showing a little sign of strength here after the recent sell-off that it's faced. I'm curious to see if this does continue and what that could signal to global markets. Yen strength usually is a response to kind of a more risk-off feeling in the market. So with some strength here on the yen, I'm very curious to see if that materializes into anything further. I actually had a really great conversation today with Forex James, who came on the live stream. The A1 Trading Show rolls Monday through Friday in the morning. If you aren't already watching the stream, make sure to tune in. But James and I talked about kind of outlook for a broad basket of currencies. So he came on and had something great to say. So check this out.
If anyone watching this remembers when I was working on euro dollar shorts back in August, September, this is how I go about doing fundamental analysis. When I'm looking for something long term, it starts when you're building a house. It starts with like the ugly foundations, which is this, where I'm just drawing up some reasons, some basic things that could support the ideas. So the idea is that we're going to get CAD Swiss bearish. So the reason we've got CAD is obviously we just had tariffs on Canada, 25% tariffs. The US makes up 75% of the Canadian trade. We've got a labor shortage, high household debt, slowing growth. We've got the Bank of Canada is currently aggressively cutting rates. They've already cut 50 basis points. Oh, sorry, that was a Swiss. Yeah, sorry, they've already cut 25 basis points. The tariffs could force them to cut even more. So that gives us quite a nice central bank divergence between the Bank of Japan and also the Fed. So we've got that. We've got the Swiss. So we've got the Swiss National Bank is on an easing cycle. They've already cut 50 basis points. And again, it's likely they'll be looking to cut more as we get further into 2025. There's even been talks of possible negative rates, which, that is just talk as far as I'm aware for now. So that's not a huge driver for the trade idea, but it's something to keep in mind. But that rate cutting really affects long-term appeal for investors. We've also got, again, weak economic growth coming out of Switzerland. Now, I'll get onto why that's a possible trade idea pretty shortly. The US dollar bullish, I won't go into too much. I think we speak about the dollar quite often on the show. The yen also presenting possibly quite a nice divergence in central banks. They're slow, but they are on a path to sort of normalizing their policy or their rates. So that again does present some possible divergence. We've got US tariffs also potentially leading to some more risk-off moves, which will benefit the yen. Now, the bit I was going to come back to, the risk-off sentiment. The reason that I'm not talking about the Swiss is because if you're an investor and you're looking and you're in a risk-off period, you've got gold, you've got the yen, you've got the Swiss, and a couple of other things, but we're focusing on these ones for now. The Swiss will be really the last choice, because even when you're looking at trades, it's not just risk off, go to all risk off assets. It's the same with risk on. You still need to look for what's outperforming, what's the best choice. In this situation, I think the Swiss would be the worst choice. So the yen, in my opinion, is bound to outperform the Swiss. So, sorry, Nick, I'll just give you 1 second. So that leads me on to some trade ideas. I'll show the full amount when Nick's gone. I don't want to take too much of his time, but the first one I've actually executed on is dollar Swiss. Now, again, this is mainly driven by the central bank divergence that we're seeing. The Swiss fundamentals just aren't really enough for me to be optimistic about it. So I'm looking really to scale into this position. I've got an entry here on the weekly time frame, and I'm looking really just to see how it goes. This is stepping my foot in the water. If it doesn't work, I'll cut the position, no problem. If it does work and I start to see sentiment shifting, then I can start scaling in. I was talking to our analyst at Elite Traders last night, and he's got the same opinion. And it looks like what I'm currently looking at isn't really priced in, and it's something we could be quite early ahead of if we can catch into it.
Yeah, no, I like it. I mean, when the dollar Swiss idea especially is, I've been trading dollar Swiss quite a bit to the long side, and I like that concept a lot. I mean, when you talk about especially like the Japanese yen divergence between other central banks, that's an interesting one, right? You have Bank of Japan wants to hike rates, and most other G7 nations want to actually cut rates. So you've got this divergence, and if they get what they want, and Western nations also get what they want, the yen theoretically should strengthen pretty substantially. You also have in there that Trump generally wants lower rates and a weaker dollar, so that could come into play. So yeah, it's really interesting. The dollar, will it be strong? Well, one thing also too that you mentioned is like the CAD versus the dollar specifically, and the Mexican peso. Like the U.S. tariffs on those places, I would say likely hurt those places more than they do the U.S. It would potentially hurt the U.S. too, like the trade stuff. But I think the whole point, the negotiation stuff, is like the U.S. would hurt less. Like those tariffs could send Canada and Mexico sharply into a recession. So I think that there's a little bit of like dollar dominance, dollar strength there that could be exploited. So
many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things, all of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.